Ja, herzlich willkommen zu einer neuen Ausgabe des E-Talk. Ich bin nach wie vor in Vancouver und heute habe ich ein Interview mit einer Firma, die ich war wirklich gespannt, dass ich die hier treffe. Es ist EnWave. Wir haben bei EnWave, Sie wissen, ich bin lange schon bei EnWave drinnen, habe auch hier mal über $2 leider den Ausstieg verpasst. Habe meinen Originaleinstieg bei $1 gehabt. Das heißt, Sie wissen, ich habe einen Conflict of Interest. Wir sind nur über $2 gegangen und ja, vor kurzem, vor 2-3 Wochen, war die Aktie bei 25 Cent. Ich habe mehr gekauft, habe aber den Absturz auf 25 Cent noch nicht genutzt, weil ich gewusst habe, ich bin herüber und treffe mich mit ihm und wollte eigentlich wissen, wie schaut es jetzt wirklich mit der Firma aus? Müssen wir mit dem Schlimmsten rechnen oder geht es bergauf? Brendan, thank you for your time. I said in my German introduction, first I have a conflict of interest. I bought at the first time, I think, close to 1. Then I missed the opportunity to sell after over 2. So I'm go down the whole way. I bought more in and I missed the opportunity. It looks like it was an opportunity 2 weeks ago, 3 weeks ago when we were close to 25 cents. Then I know I'm coming over and hope that I can have an interview with you. So for me is important to understand why we're going down this way. We see a positive reaction in the last 2 weeks. And the question is this only a technical reaction so that we see after this big correction a bounce back? Or is the company maybe really in serious troubles? I think there's a lot of questions.
Yeah, well, I'm here to answer them, right? So maybe we'll first start out with the potential cause of the major depreciation in share price over the past few quarters. And we talked about this briefly before the interview, in that our subsidiary company, NutraDried Food Co., was performing incredibly poorly. And on a consolidated basis, our financials were showing incredible weakness. And I think there was genuine concern about our ability to continue funding the NutraDried business for the long term, given the operational cash burden that it was causing us.
For better understand, this was the moon cheese, produced the moon cheese, what you also sold in the past by, I think, Starbucks and so on. That was exactly this business. This is what really makes the trouble.
And distribution wasn't the problem in that business. Yeah. They still had product in Starbucks and in a lot of grocery stores across North America. The problem really with that particular business was that the infrastructure was built out far too quickly. And simultaneously, the primary input cost fluctuated quite high. Commodity pricing of cheese, which hurt margins significantly. And spending was a little bit too aggressive in trying to grow the business. I mean, hindsight's 20/20. Now you look back and you say, well, probably shouldn't have empowered the management to do what they did, but it happened. What I am proud of, though, is that our executive management team and board of directors decided to wind down that business at the tail end of last calendar year to put things in motion in order to stop the bleeding. Because I said, you look at the operational cash burn over fiscal 2021, and about 85% of that, 90% of that, was NutraDried. And so through this fiscal year thus far, obviously with September 30th year end, the EnWave technology business standalone has produced positive EBITDA to date. And so now we've gotten rid of this cash burn hole, and we have a very, very strong pipeline of projects which we can talk about in detail, which should generate further royalties for us this year and into next, with a number of large-scale installations. So I think the bounce back in the stock price had to do with the realization that we are not going to run out of cash, and that we've managed that wind down of NutraDried in a way where we have been able to sell the majority of assets, actually recouping cash back to the parent co, which is a net positive as we continue to build out our technology business.
So, and how this wind out is working? So.
Right now, NutraDried has 2 employees.
Oh, okay.
Both accountants.
Oh, okay.
So, of course, for financial reporting purposes, but the majority of those employees were actually hired by the buyer of the assets of NutraDried They actually, Creations is the company that's taken over the Moon Cheese brand. They are now a royalty partner of EnWave's, and they will pay us a royalty based on the revenue they generate from the sale of Moon Cheese. Why do I think that they will be more successful than, say, NutraDried was? A couple things. Commodity cheese pricing's come back down. They've shrunk the infrastructure of the business, so there's less overhead costs. So margins are better, less cost. And I think, the way that they're approaching the opportunity is one that will yield benefits to both EnWave and Creations going forward.
So, and coming back to this royalty stream, that was always in the idea of EnWave to create this royalty business. So with all your, especially when we, I remember the opportunity in the cannabis space, that was always a royalty business thinking. So how the other businesses looking now? Is it the NutraDried is done?
Yes.
So no more cash outflow in this business?
And no more paper royalties. Because it was a subsidiary, there was no changing of cash in hand for royalty payments that NutraDried would have owed us as a standalone licensed partner. But now, having Creations take over that business, we'll actually start receiving cash for royalties immediately.
For sure.
On sale of Moon Cheese. And so we did $1.3 million in third-party royalties previous fiscal year. For this fiscal, we're targeting closer to $2 million, part and parcel of the sale of the assets of NutraDried. And the recent installations we've had in Italy, Eastern Canada, and in Thailand for Dole, which should layer in some material royalties for the latter half of this fiscal year.
Okay, and how normally looks like a royalty deal? How many do you get a percentage of the revenue, or how it looks like?
There's 3 different structures that we will accept. First is a percentage based on the revenue generated from the sale of vacuum microwave dried products for each partner, typically between, call it 2.5% to 5%, depends on the business case. Second is a fee per pound or kilogram or gram produced on the machinery. So it's based on volume production. That's more appropriate for companies that are going to be combining vacuum microwave dried ingredients with non-vacuum microwave dried ingredients and then selling it to the consumer. And then finally, we do a usage-based royalty now, where it's a flat fee per month, per quarter, per year, where we're targeting the same range on royalty generation as the other 2 structures, but it's less dependent on the usage of the machinery or the success of the product. So it's less risky to implement that particular structure.
And you get money also up front for the machine itself, or you give them the dry machine, and then you live out only on the royalties, or you get also a cash component?
Both. So we will always collect royalties from each partner that buys machinery, and they buy machinery. We're not giving it away to them for free, and we are able to build these machines and deploy them without expending a lot of capital. So typical structure would be a 40% down payment, and then subsequent payments through the manufacturer of the machinery before it's being delivered. So we can build 5, 6, 10 machines without needing to raise capital to support the builds, because we're collecting the necessary funds up front from the buyer to build those units. One area that we have been more generous in the past 12 months is getting our smaller scale units in the hands of prospects to trial and test new products at minimal cost. Makes sense, because some folks would be, well, there's no guarantee I'm going to generate something of value here. Why am I going to pay you 50, 100 grand to do so? Well, no, let's get rid of that roadblock and try and accelerate adoption.
Okay, but this mean, except the smaller parts, then you give them more or less for free, that they can trial, run a test pilot on it, and if it's working, then they normally come back and buy a bigger machine for you. Exactly. So, but the bigger machine is for you, that you're not. So the costs are covered for the machine with the payments from the client.
Correct, and they sell for anywhere between, call it 1.5 and 2 million USD. Okay. With healthy gross margin.
Okay.
So we're not operating with thin thin margins, it's quite robust, which can support our business and our expense structure at the parent co.
Okay, so we are deep now in the technology business. Yeah. So how the growth looks like there?
What excites me the most, and start getting into the capital markets a bit more to share these details, is the planned or already occurred launches of new consumer packaged goods products into the market. One being Dole, having launched a snack brand called Good Crunch in North America. We understand what their plans are for international growth for that portfolio, and of course what manufacturing capacity might be needed to support that growth. So now it's up to the consumers in market. They need to buy that product and buy a lot of it to obviously justify further investment from Dole in that area. The second would be with Calbee out of Japan. They're doing a more robust distribution strategy for their premium snacks forthcoming. They have a large-scale machine set for installation in July, so we're excited about that. And then two companies which I can't name, but the products I can identify. A pepperoni chip product will be going to market in North America this summer, which we have high hopes for. If it resonates with consumers, that could be a quick maturation to large-scale machine needs. And second would be, two more products. Dried cheesecake, which we've been working on with the U.S. Army for years now, and I know it's been frustrating for shareholders, but in the very near term here, we should see an evolution for large-scale manufacturing capacity for that particular military ration for them. But from a consumer standpoint, there's a major dairy company that's looking to take that to market, which again, product launch drives royalties, drives machine sales. And then lastly, there is a new fruit style of product we've developed internally. It's like a brittle. So if you think about like caramel or chocolate brittle with inclusions in it, and it's typically a very sweet snack. Well, we've created a similar type textural experience, but it is predominantly made of a banana puree or another fruit puree. And so we have a handful of companies right now, one of which is looking to launch this by school year, so September of 2023. And we have high hopes with the prospects of that. So there are a few different product launches which I think could be drivers for new business for us.
Okay, so but can we put this development a little bit in numbers, what we can expect on revenue this year or the first year when NutraDried is out of the company, so that we can say, okay, this kind of revenue we can expect, this kind of EBITDA or something can we expect, or in percentage rate, or can we put all this development a little bit in numbers?
Not right now.
Oh, not right now.
specific financial guidance because we don't want to build up expectations that aren't met. We'd rather outperform what perceived expectations may be on the financial side. What I will say is go back to the point that to date, the parent co, the technology business in this fiscal year, has generated positive EBITDA. Second, third-party royalties. Talked about the quick switch of the Moon Cheese royalties going from paper royalties to cash royalties for us, plus 3 large-scale machines already installed, which will jump up royalty-generating potential, and a 4th going to Calbee in Japan later this summer, amongst some other in the pipeline here that we're hoping to close off, i.e. U.S. Army and a few other big deals. So if we add those in and get closer to sort of that 2 million threshold in third-party royalties, that would be, I think, a good indicator of us moving in the right direction of profitability. And in terms of top line, it really comes down to the timing of these potential new large-scale orders, because all of those are recognized on a percentage completion basis. It will, again, heavily depend on how much of the machine can we build, how fast, on a quarter-by-quarter basis. So it could fluctuate up and down, and I'm not sure where we'll net out for this fiscal, but if you ask me what my goal is for this year, or what our goals are, would be positive EBITDA, bottom line, and some material growth in royalty revenue. Those 2 key metrics for us are what we're focused on.
Okay. Fair enough. That's I can live with that. And I think I get no more out.
You have to. So. Yeah.
But coming to the shareholder structure, with this decline of the share price, do you see also a change in the shareholder structure? Was there some bigger groups that went out of the business, out of the share price, or?
No, not to my knowledge. We pride ourselves on knowing where the majority of our larger accounts are held, and the feedback, even through the toughest of times in the past few months here, where the stock has really come under pressure from what I think to be a lot of retail investors getting out of the stock, they're holding strong. And in fact, several of them are starting to soak up some of the volume at these levels. And I think that's what's helped it rebound, obviously, with some more positive news with the asset sale at NutraDried and a few things. There has been no direct communication stating that there is an impetus for a large sell-off. And so what I hope will happen here is, now that NutraDried is behind us and we're coming out with a more focused strategy to execute now just on the technology side of the business, is that we deliver news flow that's going to encourage more buying, and then it turns in the opposite direction. So the retail emotional seller that thought that perhaps we would go bankrupt due to NutraDried's cash burn pressure, that's no longer a concern. We'll now jump on back into EnWave because we do ink a few material new deals that gets the market excited again.
Okay. How many shares are outstanding at the moment?
About 110 million.
Yeah. So the market cap is around 50 million at the moment?
Give or take, yeah. It fluctuates day to day, but it's just under 50, I believe.
Okay. Brendan, thank you for the update.
You're welcome.
Ja, Update, EnWave. Wie gesagt, ich habe lang darauf gewartet. Warum ist die Aktie so nach unten gegangen? Das liegt daran, vor Jahren, vielleicht können Sie sich noch erinnern, war eines der Produkte, die Sie selber produziert haben, eben dieser Moon Cheese, der auch beim Starbucks und so weiter zum Kaufen war oder ist. Und der hat allerdings in den letzten Jahren sehr viel Geld verbrannt. Warum hat er sehr viel Geld verbrannt? Der Käse, also das Ausgangsprodukt, war sehr teuer. Sie haben wahnsinnig viel investiert in die Infrastruktur, damit sie das auch liefern können, was verlangt wird. Und er hat gesagt, der Verkauf war nie das Problem. Das Problem war, dass die Margen einfach kollabiert sind, beziehungsweise einfach ins Negative gerutscht sind. Und die haben so viel Geld immer einschießen müssen. Und im 2021er Jahr, sagt er, war halt das 80-85%, 90% des ganzen Geld, das weggegangen ist, war für diese für diese Moon Cheese Operation. Und sie haben dann jetzt letztes Jahr entschieden, sie schließen das und haben jetzt diesen Teil eben verkauft. Das Positive daran ist, dass sie natürlich jetzt die Kosten nicht mehr haben, aber im umgekehrten Umschluss, sie haben auch jetzt gleich positive Royalty bekommen. Das heißt, sie kriegen einen Teil des Umsatzes. Den vorher haben sie nur intern verrechnet und das waren quasi nur Paper-Umsätze, aber tatsächlich ist nie Geld geflossen und das haben sie jetzt unmittelbar natürlich umgedreht. Ihr Business ist ja prinzipiell so, es ist ein Trocknungsbusiness. Sie bauen diese Maschinen und verkaufen diese Maschinen. Sie kriegen auch Geld dafür, da gibt es Upfront-Zahlungen und dann während der Installation dementsprechend Zahlungen. Das heißt, das an sich ist operativ positiv. Das Wichtige ist allerdings Royalties. Sie kriegen Royalties von den Umsätzen oder eine Flat-Fee oder wenn Sie pro Gramm, was Sie produzieren, je nachdem, was der Kunde eben für den am besten ist, beziehungsweise für was er sich entscheidet. Das macht das Spannende aus. Also das heißt, Sie verdienen was an der Maschine plus natürlich dann an dem Umsatz, beziehungsweise eine monatliche Fee oder jährliche Fee. Und er sagt, der Fokus liegt jetzt, weil ich gefragt habe, wie schauen jetzt die Umsatzerwartungen aus, nachdem Moon Cheese quasi erledigt ist. Er sagt, da kann er nichts sagen, ist rechtliche Problematik da, aber der Fokus liegt an Revenues, also von Royalties, plus dass sie EBITDA positiv sind. Das sind die Komponenten, die sie eben sagen, sie sind EBITDA positiv schon, wenn man EnWave Technologies anschaut. Und von daher, schauen wir mal, die Aktie hat schon sehr positiv reagiert. Ich habe ihn gefragt, ob es irgendwelche größere Blöcke gegeben hat, weil für mich hat das ausgeschaut, wie wenn ein großer raus will. Er sagt nein, er weiß nichts davon. Er glaubt eher, dass es Retail waren, die den Kursdruck aufgebaut haben. Da bin ich mir nicht hundertprozentig sicher. Retail schaut das nicht eher für mich so aus, eher eben wirklich wie ein eher größere Institutioneller rausgegangen ist. Aber der müsste irgendwelche Filings machen und das ist eben nicht der Fall. Wer weiß, was da noch rauskommt. Spannend auf jeden Fall, weil wir scheinbar jetzt den Tief haben. Leider haben wir jetzt schon eine relativ gute Reaktion wieder gehabt. Wir sind von 25 Cent eben auf die 45 Cent wieder gelaufen ungefähr. Vielleicht kommt wieder auch eine Gegenbewegung, vielleicht wieder nach unten, vielleicht kommen wir noch mal in die niedrigen 30er und dann werde ich, glaube ich, noch mal ein bisschen eine Position aufladen. Das war's von EnWave im April 23. Ja. Aus Vancouver. Tschüss und Baba, vielen Dank. Thank you.
Thank you.